India has surpassed all other major economies in the world in terms of rapid expansion.
We have received reports of an outbreak of respiratory illness. About 8 other countries around the world are also reporting similar outbreaks. The official case count is about over 220 with 8 deaths.
The numbers are staggering. Over 9,000 people are infected, which means that, once it reaches that level again, the spread will be that much faster.
And we don't know the laboratory analysis of this particular outbreak.
News of a new COVID variant. Stocks fell and headed for their largest weekly drop in nearly 2 months today.
The Indian economy is classified as a middle-income emerging market economy. It is the world's 6th largest economy in terms of nominal GDP. In India, numerous new businesses are being started and sponsored. Across the country, a growing number of young entrepreneurs are launching their own enterprises. They establish new brands and goods, employ thousands of young Indians in the process, and leverage technology to make their businesses more efficient. New business models including e-commerce, food delivery, digital payments, and other on-demand services quickly emerge as a clear example of this trend. More than $63 billion in venture capital was invested in Indian technology startups between 2016 and 2019. New startups are springing up daily in India, making it the 3rd largest startup ecosystem in the world. India's economic output has increased from 6% to 7% each year since the 21st century. Over the next 10 to 15 years, it is predicted to be one of the top 3 economic powers in the world, supported by its robust democracy and strong international alliances. As a result, investors in India had plenty of reasons to be upbeat and optimistic. Therefore, the stock markets were doing well, and in 2019, they reached record highs of 12,300. And then 2020 happened. The emergence of novel coronavirus wreaked havoc on people all across the world. On 28 February 2020, the Sensex plunged by 1,448 points and the Nifty fell by 432 points due to rising global tensions induced by a coronavirus which the World Health Organization (WHO) has warned has pandemic potential. During the week's 5 trading days, both the BSE and NSE fell continuously, resulting in the worst weekly drop since 2009. As of 9th March 2020, the Sensex had fallen by 1,941.67 points and the Nifty 50 had lost 538 points. There has been a 13-fold surge in the number of COVID-19 cases outside China in the last 2 weeks, and the number of nations affected has tripled. More than 118,000 cases has been reported in 114 countries, resulting in 4,291 deaths. Thousands more are clinging to life in medical facilities. And on 11th March 2020, that major announcement came.
In the days and weeks ahead, we expect to see the number of cases, the number of deaths, and the number of affected countries climb even higher. WHO has been assessing this outbreak around the clock, and we're deeply concerned both by the alarming levels of spread and severity and by the alarming levels of inaction. We have therefore made the assessment that COVID-19 can be characterized as a pandemic.
The very following trading day, that is on 12th March, the Sensex plunged by 2,919.26 points, which is an 8.18% drop, while the Nifty 50 broke down by 868.2 points, which is an 8.3% fall, which was the greatest week-to-week decline in the history of the Indian stock market. As soon as trading began at the BSE and NSE the following morning, 13th March 2020, stock investors began selling their holdings in a state of panic. As a result, the Nifty and Sensex plunged by 10% and 9.4% respectively, causing widespread panic and pandemonium.
So 17 points and counting down to hitting lower circuit, 8,631.15. That's your circuit limit. That's your 10% circuit level. We're just about somewhere there.
I think we hit the circuit limits.
Yeah.
We hit the circuit limits on the Nifty, so we are 10% down. I think the last time that we hit this was a few years away. We are 10% down. Lower circuit on the Nifty 50.
Therefore, trading in NSE and BSE was forcibly halted for the first time in past 12 years. As soon as it became clear to us that the stock market was in a crisis, at that moment, that precise moment, we realized that we were in the midst of a crash. Following the WHO's declaration of the coronavirus pandemic a worldwide emergency, widespread lockdowns and travel restrictions were imposed on a large scale all around the world as a precaution. But each passing day, the number of COVID-19 infections and deaths increased drastically all across the globe, with thousands of new cases recorded every day. Investors were frightened about the economic and financial ramifications of the pandemic, and they began withdrawing large sums of money, resulting in a worldwide stock market crash. Global economic collapse and halts in manufacturing in many countries dealing with the outbreak have been caused by the pandemic. Over the course of several days, panic selling was observed as investors' uncertainty and fear grew and spread. And on 23rd March 2020, trading was once again halted for 45 minutes as the Sensex hit a lower circuit limit of 10%. Even after the trading resumed, the selling was still going strong. It was the second trading halt in the Indian stock market in a span of just 10 days. The COVID-19 pandemic had a devastating influence on the oil industry. On 20th April 2020, crude prices plummeted from $18 a barrel to around minus $37 a barrel in a matter of hours. This was the first time ever in history that crude oil prices have fallen below zero. This was due to oil producers being compelled to pay customers for the barrels of crude that they could not store due to increasing stocks of oil, threatening to overload storage facilities. It's essential to know how this pandemic affected the Indian economy in general. Due to the rapid spread of the pandemic and the consequent decrease in output, numerous necessities were in short supply, resulting in inflated costs. Since people were required to stay at home until they were cleared by medical tests, life as we knew it came to an abrupt halt. Because of a lack of manpower and the fear that it might spread the virus further, no work or other activity was permitted. There was an increase in crime rates across the population due to a rise in unemployment. Many people committed suicide as a result of debt, food scarcity, and increasing feeling of hopelessness about the future. a 40% loss in agriculture sector, a 30% decline in information and communication technology sector, and a 25% decline in healthcare sector. It was predicted that the manufacturing sector has experienced a 45 to 50% decrease. The sector of the hotel, hospitality industry, tourism industry, aviation and travel sector, automobile sector, real estate, and construction sector was severely impacted and suffered significant losses. As per the official data released by the Ministry of Statistics and Program Implementation, the Indian GDP declined by 7.3% in the April to June quarter of the fiscal year. This was the worst decline ever witnessed since the ministry had started compiling GDP stats quarterly in 1996. From the fastest emerging market economy in the world to the fastest collapsing economy in a matter of days, this crisis left everyone with that one question: what's next? How are people going to make it through the upcoming days? Who knows what the future holds for India's economy and the stock market? Everyone proclaimed that this was the end of the stock market. But for now, all I can say is this is just the beginning.